time to do that, but let's see.
Is that okay?
I'm not sure, but let's try.
We're going to have to. I am screen sharing. That's what it's told me. Okay, so let's have a little look at oil, shall we? I'm just doing a quick comparison because it was a really volatile week in oil, and it previous week, and obviously the week that I was meant to be doing the trading retreat or doing oil, it was in a decisively tight range right up until the Thursday evening after we came back from dinner, and then it popped. But there's been plenty of volatility right throughout this week, and we've closed above 120 US dollars for the first time since early March. Okay, and that was the spike that we had when early March was it response to the Russian invasion of the Ukraine. So on the daily chart, price action retraced back to the monthly pivot and the 20 EMA, which was a combination, and duly bounced, providing a setup on Friday morning after a 3-bar retracement on the 4-hourly chart. And we can see on the weekly and monthly chart, that provides a clear picture. The upside is still in play for the time being. So let's have a look at what happened. We had a retracement back down, and on the right-hand side, you can see there was a bounce off the monthly pivot that coincided with the 20 EMA. We've got the DI plus above the 25 line. We've got the ADX well above the 25 line, and the MACD above the signal. So everything was pointing upwards, and a strong move to the upside on Thursday. What I was looking for was a breakout of the mishmash. Now, this mishmash, as you can see, compared to the week before, which was just flat as a tack, and then there was pop, and then a further consolidation or accumulation of the asset. But here we have been all over the shop. You can't quite see the volatility on the daily, but if you drill down onto the 4-hourly chart, boy, she was all over the place. Now, why was she all over the place? And I'll just, before I go there, I'll just go back. The fundamentals. It's been a roller coaster. We had China coming out of lockdown. That sent oil prices up initially as dormant demand was expected to fire back up. Now, China is one of the largest consumers of crude, and that's why China coming out of lockdown and things starting to crank back up in China was going to have an impact. Also, we had OPEC Plus increased its monthly increments. Now, we've been talking about OPEC Plus having the fastest meetings of a month where they just agreed blindly for the increased incremental increase of 432,000 barrels per day of the entire OPEC countries. And that was to keep it under control, so they didn't flood the market, that they had that situation going back to when all the countries went into COVID and lockdown, and demand disappeared and supply was onerous. And we saw that horrible scenario where oil went to zero. Actually went lower, but we won't go there. Now, they have actually sped up their schedule, which was to see July and August having an increase from the 432,000 barrels up to 648,000. Now, interesting, why that needs recognition is we saw oil come back down, and because it was an increase in supply of oil. But what then happened to turn things right around was before the news of dropping US inventories, US oil inventories, combined with the EU's decision to ban Russian oil imports. Ta-da! And then we've got a bang-on horrible combination of why the supply was being choked. The other thing was, that was a big thing, was that, and it just was one more foot on the throat for Russia for exporting its oil to whomever was going to buy it, was that the EU finalised its prohibition of financing and financial assistance services for Russian oil cargoes, i.e. no insurance on their trading, on Russian trade. Don't you think that stopped? And Russia is also struggling just in general to supply its previous levels as it continues to fight Ukraine. So we've had an incredible week I'll just flick back to and you can see the movement. Click back to the chart. Look at this movement backwards and forwards. The previous week, look at the size of the bars. Nothing was happening. It was consolidating, had a pop up when they thought China was coming out. And then there was OPEC releasing more oil into the market and it came down. And then bang, we've just had this horrendous move right back up, and a really strong move up after the US job numbers on Friday night as well. Just kept going. So yeah, you can see there quite clearly that was a really good move. But let's just have a look at the next slide. And anywhere, can anyone see? I mean, we're starting to get nosebleeds here with the move, Geoff. It just doesn't abate. It's really respecting. It's only back in December, where, by the way, December is that move down there on the weekly. That last quarter in 2021 is a seasonal trend where oil retraces and declines anyway. That's quite a seasonal move. But to see what we've seen here in the volatility, you can just compare the size of the bars and the movements that we're getting every day and every week. Is just phenomenal in relation to what's been happening for the last 2 years. So let's just move to, we've done review, we've done fundamentals, outlook. Now, I really do think we're going to see continued pressures on the supply side of oil. With China opening up, that's going to increase demand. And we all know what happens when supply becomes a little more restricted and demand outstrips supply. So I think we're going to see more upward pressure on WTI and Brent. The daily bar closed on its high. So like a good technical analyst, I'm going to look for a little bit of profit taking and a little bit of a retracement before I see another setup for the long side. So going ahead this week, beware of further volatility, but my bias is for more to the upside.
Yeah, a little bit tough to jump in if you're not in already, of course. That retracement thing is what you'd be looking for next if you're not in that at the moment, one would suspect. Yeah,
so we saw a nice retracement on Thursday, as you can, I'll just pop back here, but you can see that nice little they call it three stone crows or three black crows, or no, stone crows is that's a band, isn't it? Yeah, three stone crows. Or hub and crow's nest, can't remember. Anyway.
Something like that.
Something like, but you can see that very neat technical setup, and then you got the nod to go ahead with, you know, your MACD above and your DI plus starting to head north, and you know, look at it, it's not coming back down in a hurry. That's a really strong, decisive move to the upside, isn't it? So yeah, if you haven't filled up your tanks, just don't start having a heart attack when you start paying over $2.19 to put the petrol in your car.
Hey, look, I live in Tasmania. We've been doing that for ages.
Oh, look, I'm downtown Sydney. I'm not that far from Kurnell, am I? But hey, it's tough. It's going to be tough, and that's obviously.
What'd you say? You're not far from Kurnell. You nearly said it.
Oh, I mentioned. I don't know why I did that. Sorry. Yes, obviously, increase in price in fuel is going to have a flow-on effect across the economy and logistics and chain supply and all that kind of stuff. We're going to start seeing it hitting the hip pocket in a lot of things.
Yeah. Inflation's not going away anytime soon. That's a fact.
No. So that's what I'm saying. You slice and dice this. You have a look at this oil chart. Don't be surprised with the CPI figures that you see on Friday.
Indeed. Gee, full of good news, Ainslie.
I know. Gold's going nowhere and oil's just going up, and it's going to cost you an absolute bucket load to fill up your petrol tank. And but as traders, you can spend more time at home in front of the charts.
You can offset that by buying oil.
You don't need to be driving anywhere, because now you can be trading something because you've got volatility. We like a bit of volatility, not quite as much as that we've seen, but you get on a ride and go for it, and it's all good. Yeah,
can't do much without it. That's a fact.
That's true.
All right.
I'm done.